A lot of people dismiss the buildup in corporate, I should say, personal debt, consumer debt in the U.S. as simply being a blip, not as big as it was last time, not something to pay attention to. Why do you think they should?
Well, so I would actually agree that I don't think the issue is going to be as massive as what we saw in the real estate market. And the reason being is because if you look at the consumer's balance sheet, 70% of the balance sheet is made up of residential real estate, or residential mortgages and home equity lines. Now, if you strip that out, the remaining portion, that 26, 27%, there's a small amount that's other, is in consumer debt that is credit cards, student loans, and auto loans. Now, if you look at each individually, they're not that massive portion of the balance sheet, so theoretically they shouldn't be too much of an issue. But if you think of them together, they could create some sort of problem. The reason being is because the same consumer who's borrowing the auto loan is also using the credit card to finance their acquisition. The same consumer who's using the student loan might be using credit cards to offset some of that student debt.
So play this out for us, right? So you have a sort of smaller segment of the U.S. consumer base that is highly leveraged and more vulnerable. How does that bleed out into the broader economy?
Correct. So I think that just is more of a description of the remaining economy. So when you think about the recession, you think about what has happened since the recession. You have a scenario where the auto market has been a symbol for what has been the growth environment. So we've seen autos as this story that has just been a great momentum story for the economy.
And the story behind that is the debt. And you can look at take a look inside the Bloomberg here, and you can see this is the total amount of auto-related debt over the years. And you can see it rising to an all-time high of $1.2 trillion.
Correct. So you have this scenario where how is it that the auto market has had so much momentum? Initially, it was replacement. Now it's more of an encouragement by auto lenders to continue having that buying spree by investors. So they're doing leasing. They're leasing out longer term. I think a lot of people have heard this, where we have 7-8-year leases. The biggest problem that we have here is that a lot of investors, or consumers rather, are taking on negative equity, meaning they're upside down their loans. So they're taking out more in terms of a loan than the actual car value is worth. And when you have a depreciating asset, which is different than the real estate market, it creates this unsavory environment.